All right, good afternoon, everyone. Sorry for that delay. Thank you for joining us. We have Avalara with us. They are one of our partners. Larry Sheets is going to be discussing on your first look at the most significant tax changes for 2024. And just as a reminder, we are recording this webinar and we will publish it in our on-demand webinar library for you to review again or share with anyone. And if you do have any questions during the presentation, please feel free to type your questions into the chat panel, and we'll address those during our Q&A time at the end of the session. So I'm going to go ahead and turn it over to Larry, and he's going to kick off our presentation for today.
Thanks, Angie. Good morning or good afternoon, everyone. Thank you for attending today's webinar to discuss tax changes both in the US and globally. I'm excited to speak with you all. I've been with Avalara since 2019 and have kind of led our partnership with Innovia since then. So I love working with Innovia and Innovia customers. Share some really interesting information today, and then welcome your questions at the end of the discussion. As a disclaimer before we get started, this is for informational purposes only and is not legal or tax advice. A little bit more about me. I mentioned I joined Avalara in July 2019. Prior to that, I was a financial advisor in the Seattle area with Edward Jones. And before that, I was in the Coast Guard for 8 years. I'm originally from the East Coast, from Northern Virginia, but since I left high school and for college, I've lived all over the country: Connecticut, Alaska, Florida, Massachusetts, and finally settled down in Washington State with my wife and our 5-year-old daughter. So excited to chat about all things sales tax today, and we'll go ahead and jump right in. Here's what we're going to cover. High level, very briefly, who we are as a company, how long we've been in the industry, where we have specialty, as well as major changes that we've seen in the international landscape, income tax updates to rules and regulations in the US, as well as additional capabilities that we have. We'll wrap up with Q&A and then some interesting campaigns that we've got going on to help you all really from the ground up, understanding where your obligations are, and then understanding if potentially we would be a good fit for your sales and use tax needs. All right. So Avalara has been around since 2004. We are headquartered in Seattle, but have a secondary headquarters in Durham, North Carolina, and then a major presence in the EU, India, and Brazil. So we are a truly global company with over 4,400 employees. In terms of our expertise in the sales and use tax space, for those of you who are highly exempt businesses, meaning you're not collecting a ton of tax, either you're selling to resellers or you're in manufacturing or distribution, those exemption certificates are paramount. That's where the majority of your risk lies. And then where we fit into that equation is, we manage more than 30 million of those exemption certificates for our more than 20,000 customers globally. We are very partner-centric in the way we go to market. Over 1,200 partners have signed on with us to develop or implement our solutions. I focus predominantly on the Microsoft Dynamics space, but we also have dedicated practices for NetSuite, QuickBooks, SAP, all of the major third-party solutions. For our sales tax determination engine called AvaTax, we handle 33.9 billion API calls in 2021, and then filed more than 4.1 million returns globally in 2021 as well. Right, so this is what we refer to as our compliance cloud. For business transactions, this is everything from determining tax, doing the back-end filings, and to include remittance to the applicable jurisdictions, as well as the management of customer exemptions, helping you get your vendor exemptions out to your vendors, And then on the compliance side, helping you manage your business licenses. That's everything from, business licenses themselves for different brick and mortar locations. That's state sales tax registrations. Could also be state sales tax deregistrations, fiscal representation if you have global requirements, as well as the industry-leading tax research platform. So it really is an end-to-end solution for all things sales and use tax. A little bit more information on our tax determination service and why it's so important. Um, this slide really illustrates the example that I typically use in my introductory calls with prospective customers, where we talk about how complicated sales and use tax determinations are in the US. Between the US and Canada in 2023, we saw roughly 98,000 rule and rate changes across the more than 12,000 different jurisdictions. Now, what that means, to pull the layer of the onion back even further, is states like Colorado that are highly complex from a sales tax perspective. If you're using zip codes or even zip +4 to determine the appropriate rate, in the metro Denver area, you could be shipping to two customers across the street from one another who would be subject to different rates. And if you're using zip code based determinations, that leads you down one of two risk factors. Either you're under collecting on those sales, in which case you could be in hot water with the state, or you're over collecting and introducing competition to your space where frankly it's not warranted. So with our solution, what we're essentially doing is dropping a pin on the map like you do with Google Maps to capture latitude and longitude for that specific rooftop address. So those two scenarios of either under collecting or over collecting due to an inaccurate rate application, those both go away entirely. We're the only vendor in the space that has an accuracy guarantee on every determination that we do. You harken back to a couple slides ago where, in calendar year 2021, we handled almost 40 billion API calls. We get each and every one of those right. We're the only vendor that does that. All right, now we're going to talk about taxation in the digital age. This is mainly a global concern, but this is also something that the individual states in the US are looking at closely. So this discussion mainly hinges around the process of e-invoicing. So globally, 60 plus countries have or will be adopting e-invoicing mandates, which really what that means is rather than filing and remitting to the jurisdiction in the US at either a monthly, quarterly, or annual frequency, it would be filing and remitting to the applicable jurisdiction almost in real time. So it would be a major shift, one that the US isn't quite positioned to do just yet because sales tax resides at the state level, but it is something that's changing globally, with the EU in particular proposing this plan to modernize that application. That's been delayed a year, but on this next slide here, it's becoming a bigger and bigger focus in the US. So FedNow is the Federal Reserve instant payment program designed to reduce the time and cost of moving money. Think e-invoicing is the future. When is anybody's guess, but this is where things are going. I just highlight this because if you have global requirements, we can meet those e-invoicing requirements now. We're moving in lockstep with those countries globally to make sure that our customers who need that solution have one in place by the deadline or as close to it as possible. And then also we're maintaining visibility on if this does become the norm in the US, we're positioned to do that as well. So income tax updates reflected here on the slide. State-specific updates is really where I want to point you here. The Ohio CAT tax increased its annual exclusion from 1 million to 3 million. And then Washington State exempted newspaper printers or publishers or eligible digital content from paying the B&O tax from January 1, 2024 to January 1, 2034. So again, these are more updates. We can assist with this as well, but it just goes to show maintaining this in-house as your businesses are growing quickly becomes a drain on those key resources. So I'll stop here briefly. Please fire away. What's been the most challenging aspect of managing your tax compliance in 2023? You can either propose this now or we can come back to it later. Angie, let me know if anybody comes in.
Yeah, everyone, you can go ahead and put your answer in the chat and I'll review them.
All right. As those come in, we can address, but I'll keep things moving along here. Unless Angie, did you have any come through?
There are a couple, looks like, that are coming through.
Okay.
New e-file mandates for information returns and being able to track customers with multiple state exemptions.
Okay.
And it looks like maybe we have one more coming.
So those first two we can absolutely handle with our core functionality. Just to kind of give you a high level overview of how I work with potential customers is understanding what your requirements are, whether they're US, global, or both. I think we're going to turn over every rock, understand what your requirements are, where those requirements are, whether they're exemption related with those multi-state requirements or e-invoicing requirements, match those up with the corresponding Avalara capability, show you what that capability looks like within your Microsoft Dynamics environment. Because all these different platforms that we have, are really have become the industry standard in terms of capability. And what we've done internally is now place that functionality within our Microsoft Dynamics pre-built connectors. So it's designed to run in the background, stay out of your way, but still deliver that guaranteed accurate determination as well as the on-time or early filing guarantee that we have as well. So for that multi-state exemption requirement, we can certainly do that directly through GP Nav Business Central. So your end user within the ERP can do everything they need to do within the ERP and within the customer card, whether it's requesting documents for a brand new customer that you're creating, updating an existing exemption, or adding to the required documents you're supposed to have on hand directly through the customer card. So really cool functionality. And that's kind of how we stay out of your way, but to use the Avalara speak, elevate your standard of compliance. So take that risk, take that time burden off your plate, give you a guaranteed accurate solution, and then free you up to do those more higher value activities. All right, let's talk about US updates to economic nexus, and so which is Wayfair from 2018, and then the marketplace facilitator updates, which we call Wayfair 2.0. These are two of the biggest shifts in the US sales tax landscape since we've had sales tax regulations on the books. Let's get into it here. So 5 years since the Wayfair decision, so that was June of 2018, so coming up on 6 years at this point. From a 2023 survey that we conducted, 72% of respondents think online sales tax laws are complex and confusing. Again, every state's different. For states like Colorado, Alabama, and Louisiana that allow local jurisdictions within those states to have their own requirements as well, becomes even more burdensome. Frankly, that's why Avalara exists. We can take those burdens off your plate. 40% of respondents say economic nexus laws have increased the cost of managing tax requirements. And then finally, 72% of respondents have invested in technology to help with those determinations and reporting. So there's a huge need for automation because the pace of change, I mentioned 98,000 or more rule and rate changes in the US and Canada in 2023. That's too much for one person or a small tax team to manage, in addition to all the other projects you have on your plates. So updates to Economic Nexus. Officially, all 45 states with sales tax regulations on the books, plus the District of Columbia and Puerto Rico, have enacted Economic Nexus laws, and those thresholds vary state by state. We've also seen, of those early adopters of Economic Nexus laws, lowering their thresholds. So this orange bullet point here highlights that. States are reconsidering Nexus thresholds. 10 states have dropped the transaction threshold so far. So initially, in 2018, 2019, and early 2020, most states' thresholds were a combination of $250,000 in taxable sales and 200 unique transactions as their thresholds. What we've seen is 10 states have removed that transaction threshold altogether, or it's been lowered from 200 down to 100. And the revenue threshold has lowered in a lot of cases from 250,000 in taxable revenue to $100,000 in gross receipts. So traditionally, businesses that are highly exempt are now required to register and file in more jurisdictions purely based on their sales. This is kind of how things have fleshed out, the current landscape. I'm happy to get this deck over to everyone after the webinar today, but thresholds in California, Texas, and New York are $500,000, $250,000 for these light orange, $100,000 for the even lighter orange, and then $100,000 or 200 unique orders in these blue states. It's a lot to manage. It's a lot to keep track of. And one of the benefits of using Avalara is we're able to monitor your sales in every single state through our pre-built connectors, whether it's GP, Nav, or Business Central, and able to flag those threshold requirements and notify you as you approach or meet or exceed those requirements to register. So again, we're taking even more of that manual burden off your plate just by tracking where your obligations are. A little bit more information on how complex this is. These states in dark purple include gross sales, including sales made through a marketplace. So again, that's an added wrinkle to the economic nexus equation, which we're going to touch on here in a second. So for marketplace facilitator laws, at a 30,000-foot view, that's the responsibility to collect and remit sales tax residing with facilitators. For anyone selling through Amazon, you may have noticed Amazon is collecting tax on each of your sales, whether you're registered in that state or not, and remitting to the appropriate jurisdiction on your behalf. So then the obligation for you becomes reporting those sales on your state filings. So furthermore, states are revisiting their definition of what constitutes a marketplace facilitator, but that application does vary state by state. And then also, in a lot of cases, how a particular marketplace facilitator chooses to abide by these regulations has largely been left up to them. So how Amazon views their obligations could be different than Etsy, which could be different from eBay and Walmart. We can certainly help with all those determinations. All right, let's talk about 1099 reporting requirements. So updates are coming. Online marketplaces, payment applications, and credit card companies are required to file Form 1099-Ks and provide to sellers. So the current threshold is $20,000 in payments and over 200 transactions. And the IRS will phase in lowering of that threshold in the coming years. So for tax year 2024, that threshold is likely going to fall from $20,000 to $5,000. And then the following year, tax year 2025, that's going to drop from $5,000 to $600. And that's coming straight from the IRS. So more changes are coming. We have the ability to support you there as well. Talk about retail delivery fees. For Colorado and Minnesota, they're the primary states with these fees on the books. So Colorado's retail delivery fee applies to all deliveries of tangible personal property made by motor vehicle in the state. So effective May 4th of last year, qualifying new businesses and businesses with less than 500K in sales during the previous year are exempt. But effective July 1 of last year, the fee jumped from 27 cents to 28 cents. And the last piece is very important here. Marketplaces are required to collect and remit Colorado's retail delivery fee on behalf of their sellers. So this is something that will be impacting your customers if it's not already. So it's something to be mindful of. And next is Minnesota will impose a similar but different 50-cent fee on retail deliveries of orders totaling $100 or more, effective date July 1 of this year. Oh, sorry, one note of that is the taxability and the application of that retail delivery fee. So it could be imposed on delivery of clothing, even though clothing isn't taxable in Minnesota. So even more complexity. Other notable updates, Illinois is being challenged in court over the issue of destination and origin sourcing. If you're using a product like AvaTax for your front end tax determination, as those rules are either upheld or changed, those updates are made through our connector on our side. So it's not something that you need to maintain. Next is Virginia now only allows law firms in the state to help businesses obtain beverage alcohol licenses. May not be applicable to you all, but it's good to know. And then finally, Maryland and California both enacted bottle fees that in and out of state sellers must adhere to. Right, software and digital product taxability updates. The high level overview of this is states are redefining their tax laws to include digital products. The multi-state tax commission is redefining digital products for taxation, and then conversations are underway around digital sourcing within the streamlined sales tax program. To kind of back up for a moment, if you all aren't familiar, the streamlined sales tax organization is a collection of 25 states plus Pennsylvania. Pennsylvania has their own program, but for how it applies to Avalara and its customers, we just include them. But these states banded together to standardize rules and requirements to make adhering to the letter of the law easier for businesses trying to do the right thing. So what that means is Avalara went through a 3-year audit process with this organization to become a certified vendor. Now, what that means is if you outsource all of your sales tax compliance to Avalara, meaning we're going to be determining tax, we're going to be managing your exemption certificates, and we'll be doing the filings and remittance on your behalf, you would get registration for free from Avalara, actually subsidized by the states. You would get that determination within those states at no cost, as well as filings at no cost. So it's a phenomenal program to allow you to outsource more of your compliance to us to get that guaranteed accurate determination on the front end and on time or early filing guarantee on the back end at no additional cost. So it's a way to continue to grow without necessarily increasing your spend for a sales tax automation solution. Taxes on streaming services is relatively new. 33 states now require streaming services like Netflix to collect sales tax. And more localities are asserting that streaming service providers owe sales tax due to the physical presence through use of broadband and fiber networks. That's a big shift in the last couple of years. So far, localities are not having much luck in the courts, as most courts have ruled that streaming services cannot be taxed in the same way that cable companies are. So while this is all being hashed out, Avalara is staying on top of those updates and new requirements and will be updating what we call our tax content to reflect those changes once they go into effect. All right, we covered a ton of information here, and that is the gist of all 2023 and 2024 updates for both the US and globally. So I threw a ton of information at you. I want to open it up now for Q&A. What's top of mind for folks? Are there anything that we discussed in the webinar that you would like further information on, or is there something outside of what we covered that you all would like to discuss?
Thank you, Larry. I will go back to the poll question that we had. So the other attendee that asked or that suggested what they were going to be doing with that is probably switching over to Avalara. And then someone else came in with a question, so I'd like to address that.
Great.
Okay. So there are additional fields. So are there additional fields added with your product? Currently, Business Central only allows you to enter one tax exemption number, but you can't tell what state without looking at an actual document.
Okay. Let me kind of walk through how we apply exemption certificates, and then I'm going to kind of drill in a little bit further. So when we do any tax determination, um, first we're going to make sure that we drop the pin on the map like we discussed with kind of that zip code analogy for um, the greater Denver metropolitan area. We're going to capture where is this transaction taking place. Then we look at um, who is this customer? Is the customer an exempt entity? In which case, it's a quick check of our exemption certificate solution to see if we have a valid exemption document on file for that customer for that state. If we do, no tax would be collected. If we do not have an exemption certificate on file for that customer, at this point, tax would be applied pending the taxability of each line item on that invoice. So a classic example is what Avalara does. So for the state of New York, um, software as a service is taxable, but the implementation of that software is non-taxable. And then any associated training for that software is non-taxable. So on those three line items, we assign Avalara proprietary codes, which have all 50 states plus local jurisdiction taxability rules cooked into them and are updated in real time as a state or jurisdiction changes the requirement. So then we make that determination, does tax need to be collected on each line item? Um, did that answer the question, or is this more geared towards maybe the customer is taxable, but the job itself, like a job-based exemption, could be applied? Well, long story short, we can
Yeah.
handle exemptions for both customers. That's the default functionality of our Business Central connector as well as our exemption certificate management platform. But we can also handle job-based exemptions, whether that's for the construction industry or installation of hardware, things like that. We can absolutely track and implement those job-based exemptions.
Okay. Thank you. She said yes, you did answer her questions.
Great.
A couple more that I have. How difficult is automation to implement and set up? We are just a small business and the firm does not have a lot of staff time to dedicate to tech support.
Great question. So I would say in a broad sense, our Business Central um, solution is fairly straightforward to install, but the added benefit of working with a partner like Innovia is they would know your environment better than we ever could. So Innovia went through a rigorous certification process to be able to implement Avalara's solution on our behalf. So that cuts down on initial kickoff for implementation, but also familiarity with your environment. So that's a way to get you live quicker and more efficient while our team of engineers supports the Innovia solution consultants and project managers. So in short, working with Innovia, it's quick to deploy. So we can actually get you up and running on the solution with minimal lift from your own internal IT resources. But also from a company level, we've got over 1,200 signed partner integrations on the books because from minute one in 2004, we wanted to make sure that we were able to easily integrate to whatever system you're using for your invoice committal, whether that's e-commerce, ERP, CRM, point of sale for your brick and mortar locations. Well, being able to meet you where you need us and tie in where we need to tie in. So then once the solution is implemented, it runs in the background and gets you that guaranteed accurate determination in less than 0.4 of a second. So virtually instantaneous, guaranteed accurate determinations, but it is quick to deploy.
Okay, thank you. And I have another question. There are some states that include an expiration date on their certificates. Do we need to make sure that we have not expired certificates from customers for those states? Or is it okay if we get a new one every few years?
Great question. So like all things sales tax related, um, certificate expirations are up to the individual states. So, like California does not require renewals, but states like Florida require annual renewal. Our exemption certificate platform allows you to move from a reactive process, think, oh, we've been notified we're going to be audited next quarter. Let's now go and make sure we have everything that we need and it's in force to a proactive process. We'll import all of your customer exemptions into the platform, and then you're able to run reports where you determine the frequency. So you can see all documents or filter down by state that are expiring in the next 30 days, 60 days, 90 days, whatever time frame you set up. The idea being so you're never out of compliance. Um, and the reason that we do that and have adopted that approach is we've heard from both state auditors themselves as well as customers who've gone through recent audits that auditors are becoming less and less lenient on giving folks time to collect documents that may be missing once the audit starts. We've heard a lot of feedback from California in particular that what you have on file when an auditor walks in the door is what you're evaluated on and what you're held accountable to. So having a cleaned up, efficient exemption management process is paramount to preparing for and defending against an audit. And frankly, once you are in that proactive mode, the amount of time it takes to prepare for the exemption piece of an audit comes down to the amount of time it takes to export a CSV file with all of the documents for that state. So over time, it becomes much more efficient. And by integrating it directly into Nav, to Business Central and GP, it makes the day-to-day usage and updating of those certificates even easier.
Okay, thank you. And does this require training for our inside sales team that write orders?
It certainly does. That's all handled during implementation, as well as with any Avalara agreement, you have full access to our library of training. Um, but that's certainly included as part of the initial onboarding.
Okay, thank you. If anybody has any further questions, now's the time to get those in and we'll get those addressed. While we're waiting for any last minute questions, Larry, do you have anything that you'd like to wrap up with?
I do. I don't want to steal any of Mark's thunder, but we are running a free sales tax risk assessment for Innovia customers where we can look backwards 12 months and see and give you a deliverable that'll show you where your obligations are, because that's the bedrock of everything we do, determining where you have requirements and then aligning the appropriate capabilities. So That retails at list for $4,500, but for the time being, we are running that campaign at no additional cost. So you get that free risk assessment at a $4,500 value. Mark, did you have anything you want to add on that?
Just gonna say you didn't steal any of my thunder. Thank you, Larry. Appreciate that.
Sounds like a good deal.
Yeah, we've gotten great feedback on it. So it's there if folks have any questions on what your Nexus footprint looks like, especially if you haven't looked at your economic Nexus obligations in the last few years or at all, to include those marketplace facilitator regulations that are constantly changing.
Mm-hmm. And you would be delivered a full detailed report that goes over your Nexus presence, and then you could get a one-on-one consultation with an Avalara representative to go over those results and recommendations. And all of your data is private with us, so we would not share that with any other entity. It's going to remain confidential. So if you did want to see an example of one of those risk assessment reports, reach out to Larry and we can get that over to you.
Yeah, and I'll also add that I work closely with the full Innovia customer engagement team. So feel free to reach out to me directly or contact your account manager, and they'll reach out to me and we'll set something up.
All right, well, I don't see any more questions coming through. Everybody give it up for Larry. Go ahead and hit your reaction on the screen. Thank you, Larry.
Thanks, Angie. Thank you all for attending. Let us know if we can help. Happy to chat. The way that our process goes is really two foundational calls. One is to uncover where your obligations are and where you need help out of the gate, to include what does growth look like from an IT stack perspective, as well as growth of the business, because we aim to be your partner for the long haul. We want to know where you're going and kind of forecast, hey, these are some things you want to be thinking about. Through COVID, those conversations were traditional B2B businesses opening up an e-commerce sales channel for the first time, forecasting for what that looks like, as well as forecasting cost for that. Now that's taken on, since most businesses through COVID launched an e-commerce channel, now they're looking globally. So we've matched up those conversations with, frankly, best-in-class capability as well. So wherever your obligations are, we'll cover that in about a 30 to 45-minute initial call, followed up with a demonstration of those corresponding capabilities and a pricing review. So but we've got a very tight process geared towards delivering. Here's where your obligations are if you're unsure. Here's how much that corresponding capability costs, as well as forecasting your growth. So transparency is the name of the game, and we love working with Innovia. So if you have any questions, fire away. All right. Angie, thanks again for coordinating. It's a pleasure to meet everybody, and thanks for the opportunity to put on this webinar.
You're welcome. We actually have one more question.
Oh, let's hear it.
Do you have a demo we can see on how it works with BC?
We absolutely do. Angie, we'll figure out offline the best way to get that over, but we have short 4 to 6 minute canned demo videos for GP, Nav, and Business Central. So I'm happy to get those over if anyone wants to take a look at those.
And I just put that in the chat as well.
Okay, perfect. Thanks, Jess. But at a high level, how I would think of that demo video is, this is a preview of what we would actually show, because each demo is going to be tailored specifically to your scenarios.
All right. Well, if no one else has any further questions, I think we'll go ahead and wrap. Thank you, Larry and Mark, for the presentation. Really appreciate it. I hope everyone got a a lot of valuable information out of this.
Great. Yeah. Thanks, Angie. And one last thing is that Mark and Jess and I will all be in Denver for Dynamics Con and Innovia Con. So we'll have a booth at both, and I'll be delivering a couple sessions at both events as well. So it'd be great to meet you all in person.
Yep, absolutely. Looking forward to seeing you all there, and thanks for your time today.
All right. Well, thank you, Avalera, and everyone who attended. Thank you. And if you're watching this on demand, thank you for taking the time out to watch this. And if you haven't seen our new resource page on our website, you can visit innovia.com/resources to quickly access all of your Business Central content and events. And you can get the information for our conference on there for InnoviaCon and register. It is a free event to register, so make sure you get that registration completed. And feel free to contact us at info@innovia.com with any questions you may have. Thank you again for joining us, and we look forward to seeing you soon on another Innovia webinar. Take care, everyone. Thanks again, guys.
All right. Thanks so much.
Bye.
Bye.